dissimilarities between cost and financial accounts. We have seen that they are complementary to each other, but some fundamental difference is also there. So the point number one is objective. In the case of financial accounting, the objective is to know the financial status of the company or the firm. What is the difference between company, firm, organization, institution, etc., etc.? To know this, watch my another video with this heading, with this title. I'll be uploading that video very soon. So, what is the first point of dissimilarity is the objective. In the case of financial accounts, the objective is 1. To know the financial status of the company, balance sheet, liabilities and assets, and know the profits made by the company or losses incurred by the company. This is the objective. But in the case of cost accounts, the objective is primarily to know the cost. Then the second is scope. What is the scope? The scope of the cost accounting is limited to ascertain the cost and ascertain the profits earned on the basis of this cost or a product or a unit or department. But in the case of financial accounting, the scope is larger. It's addressing to the entire organization to know its profitability, loss, financial status, etc., etc. Then the third is nature of accounting transactions. In financial accounts, we record all the transactions if they are related to the organization. But in the case of cost accounts, we record only those transactions which are related to cost of a particular product or service. So that's the difference between the two. Then the next point is necessity of accounts. What is the necessity? How much statutory requirement is there? In the case of financial accounts, they are mandatory. You have to prepare them. But in the case of cost accounts, as per the Companies Act 2013, we have certain industries where we are supposed to maintain cost accounts. Not all companies or industries will maintain cost accounts. Then the next is audit. In the case of financial accounts, we are supposed to go for the audit as per the Income Tax Act. But in the case of cost, only Companies Act 2013 is defining the necessity of audit. Next is figures. What kind of figures we are going to consider? What kind of numerical figures we are going to consider? In the case of financial accounts, every figure is important if it's related to business, not cost. But in the case of cost accounting, if it is related to cost, only then it is being considered as important or recorded. Then the final is, and then the next point is 7th, analysis of profit and loss account. Yes, we can analyze profit and loss with the help of financial accounts, but we cannot analyze profit or loss with the help of cost accounts in toto. For the entire organization, it can't be considered. For a particular product, department, unit, etc., it can be considered. So, this is the possibility of analysis of profit and loss account. Determination of selling price. Financial accounts have very limited role in determination of selling price, when the cost accounts are there to help us to determine the selling price, because we will be able to know the cost of production. On the basis of this cost of production, we will be able to fix the selling price. So, this was something related to dissimilarities between cost and financial accounts. Then the 9th point is related to period. In the case of financial accounts, they are being prepared for one financial period, accounting year. But in the case of cost accounts, they are not prepared for one accounting period, but they are prepared for a specific product, for a department, for a job, etc., etc. Then the next is material control. Financial accounts can't help us in the process of controlling the material, but with the help of cost accounts, we are in a position to exercise our control over the material. Then the next one is recording of labor cost. Yeah, for any production, labor cost is really important, but in the case of financial accounts, we will be recording this labor cost, but not related to any department or process or unit, but overall recording will happen. With the help of this overall recording, we are not in a position to do any say reduction exercise or control kind of thing. So, from this angle also, financial accounts and cost accounts are different. Importance. Next point is importance. Importance means what? How important this is. Financial accounts, mandatory, important, unavoidable. You have to do it, otherwise you can't survive. And in the case of cost accounts, yes, you may go for it. It will be important if you are producing something. If you are not producing, if you are doing only trading, then there is no need to have cost accounts. And then next 13th point is control. With the help of financial accounts, we can exercise a different kind of controls. But in the case of cost accounts, we will be exercising control over the material, labor, other expenses, and we are in a position to understand how can we reduce the cost of production. And finally, presentation. How are we going to produce the accounts? In the case of financial accounts, we have to follow the format given by the Indian Income Tax Act and the Indian Companies Act. We don't have choice. But in the case of cost accounts, we have choice. Some formats are there, made by the Indian Companies Act 2013 as mandatory, but by and large, it is internal aspect, internal matter. So, the formats will be defined and designed by the management. This was dissimilarities between cost and financial accounts.